maybe trading isn't for you. Maybe it just looks appealing because you think the money side is, this amazing, which it can be, but you realize the work isn't worth it because you're not going to be paid for the work that you're going to be putting in for a long time until you hit it. Oh no, my zones never hold. Oh no, my structure always wrong. It's crazy to me that there are mentors out there teaching you to learn from your losses. Oh, just a fun little trade here. Oh, a fun little trade here. Oh, GameStop's going up. Oh, maybe I'll buy in with the retail crowd. Oh, my friend told me crypto works. I should go buy some crypto. Oh, big interest rate on crypto here. Gotta go on the crypto. A lot of people playing the slot machine, trying to jerk off the slot machine, right? And just trying to get ahead so they can worry about the real shit later. Nobody wants to come to you and say, I'm unmotivated, I'm lazy, I didn't make it, and I chose not to do it because I'm aware that I want to work for someone else because I like people making the decisions for me. No one's going to tell you that. People are taught to think that this is how markets deliver, and then they finally have their little change of character or their break of structure, whatever the fuck you want to call it. You can use whatever stupid word you want. And now, of course, it's going to be a bullish market. Perfection. This is how markets move. No, this is complete nonsense. I don't know how people get this. I don't know where they come up with it. But most of the time, what you actually see, right? Let's go. Go long. Oh my God, it got so close to my stop. Okay, I'm going to get in 2 more times. Okay, now I can't watch it. That is the life cycle of most people in these markets. Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys? Welcome back to mentfx, and today I want to talk about something that I think is very, very important, and it's the ability to independently observe things so you can learn about things for yourself in the future. The reason I think this is very important is because in this entire industry, what you're going to see is this necessity on behalf of usually the 90%, usually the ones that fail, anything that they can get from someone else to prove something to them that works, or like, oh, this guy got funded. How did he do it? Give me your funding. I need to know what you did. Show me this, show me that. Give me your strategy. Do you have signals? Can you offer me this? Can I give you this and you'll just tell me what to do? Can I earn and learn, etc., etc., etc. Instead of this understanding that independence solely breeds profitability, and usually it's not someone who has copied someone. It's usually not someone who has, gotten signals and followed the signals. It's usually not someone who got this secret little gem from a funded member to tell them the real truth of trading that, skyrocketed them and instantly turned them into a profitable trader. Usually it tends to be those that are just kind of on their own, just in their own space, consistently taking a foundational element, right? So like in the mentorship section 1 through 3, as well as the webinars, as you work through all that, I've seen on average about 3 to 6 months later, that foundation is built up into a very, very strong understanding, which by and large, from what I've seen in my private mentorship, and again, past results do not mean anything for the future, it's about 9 to 18 months that I've seen those of you that have gone like insane and stuck to something where it takes them to get funded. So, usually around the 2 to 6 month mark, I see real understanding begin to be bred in the market, and an understanding of what to do personally, which is something I'm going to talk about today because I've seen it happen. And then the 9 to 18 month, which by the way is very, very little bit of time in relation to what it usually takes in any other skill. For you to take 9 to 18 months to perfect or to become very, very proficient or good at a skill that can literally make you endless amounts of money, as well as long as the liquidity provides it, right? Which you get about 7 trillion passing through the markets each day. So, not too bad. Quite a bit of liquidity available there for you, quite a little bit of ability where if you have a skill to take out of that, even if you take 0.5% out of that, it's an insane return, right? Remember, a lot of people think they're important or they're special. They're not. This is what I tell everybody in my mentorship. All right, guys, here's a little gem. You're not special in any way, which is very good because everything you've done and everything you're doing has been repeated by someone else. I'm not special. The people I teach aren't special. You that are watching are not special. Because at the end of the day, everything we're doing in these markets have been done by the 90% that don't make it, and have been done by the 5 to 10% that do make it, and by the 5 to 10% that remain consistent forever. Anything that we do going forward, or we think, has been done before. So the beautiful part of that is that because we're not special, we can model consistency, and we can model success, and we can replicate it if we truly are after it. So it's just something to remember, something to consider. And again, from what I've seen, 9 to 18 months is really not much to ask of you, especially when most of us, including me, at some point spend over 20 years getting an education, right? Because as I like to say, to go to college, you need to go to high school. To go to high school, you need to go to middle school. To go to middle school, you need to pass elementary school. Usually that's the steps that people take. And by the time you finish college, which is another 4 years, you can oftentimes get yourself started out at a job, at a good job, at an average salary of usually around $40,000 to $100,000 a year. And you spent 20 years to do that. Now, the fact that you can do that on significantly higher levels by putting in 18 months, which is about, a year and a half, is absolutely mind-boggling, and it's unknown of and unheard of in any industry. But what's also sad is that in this industry where, quick gains are very much a possibility, people want the quick gains, right? They want the gambling slot machine, the jack machine, because they know if they jack this thing, fast enough, they start jacking it off faster, right? If they're on Instagram scrolling the reels, listening to the music, getting pumped, double liking all the reels, seeing their change of characters and inducements, and seeing all this other stuff, the more they're getting jacked, they think that they can hit that one home run that's going to set them apart, put them ahead of everyone, and then they can really, really start learning. So something to get this started off from a psychological perspective that I need you guys to recognize is you need to get rid of this mindset of, let me put off what I know consistency looks like until I have X amount of things, right? This works in the material world, like in the actual world, as well as the trading world. A lot of people are like, I'll only be happy when I get the car. I'll only be happy when I get the girlfriend. I'll only be happy when I'm out of this environment. I'll only be happy when I move cities, blah, 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 blah. And they stay stuck and unhappy forever. Oh, sad. Similarly, in the trading space, what you have is this belief that, hey, if I get some signals right now and become profitable, then I'll actually focus on the profit. If I can at least make $100 on my account, then I'll join mentfx and then I'll be profitable. If I can just flip this little FTMO account into $1,000 or into $10,000 withdrawal, then I will take a real step back and really pay attention and really, and then I'll take it in and really learn. This is the mindset that most people during this COVID run-up were in, and the reason that a lot of them lost endless amounts of capital, and at this point have lost it all, right? Those people that are in the Wall Street Bets areas, or the people that are kind of throwing their money however they want, some of them will go up, right? You'd put 1,000 people in a line and 1,000 people throw a dart at a dartboard, one of them might hit the middle. But if you take that person and tell them to consistently do that again and again over 100 more times from a dartboard, they're not going to be able to replicate their success. And if anything, they're never going to be able to enter the competition of being a dart champion, and they'll be forgotten about, and that'll be the end of it. And that is sadly most people's careers in trading, because there's this necessity in their mind to look outwards rather than inwards. And until someone starts to look at the inside, to start asking themselves the questions, to start proving things to themselves. So I'm gonna go into the Discord very quickly here, just for a second. I'm gonna block out a number of these things until we get to what I want to show you. But as we just go through anything like trade talk, we'll just go up here because we have people testing and proving things to themselves all the time. It's absolutely amazing. And here we'll unshow it. This is just someone who has begun to properly test their system, right? And again, this is insane results. And I provide all the necessary data collection sheets, Excel sheets, formulas, everything you ever need to get this kind of stuff shown to you, right? But there are a number of people, and I've seen at least over 50 people just in the last week or 2 weeks, and I've gone over this in the webinar too, send me curves just like this with them undergoing the change that needs to happen from the inward. And what I mean by that is these people are sitting there and collecting real data for themselves on their own systems that they've perfected and learned and studied based on the private mentorship, based on the confirmations that are taught here. And they have come out with results that they can look at and for themselves prove to themselves that this is something they can pursue long term. And it's almost insane. I don't market all this stuff, but but the amount of messages I receive from people every single day showing me these kind of improvements, showing me them getting funded, telling me that, you know, that their lives have been changed, it's absurd. It's too much to count. It's too much to even advertise. I don't even know how to do it without it looking completely superficial and fake. So I'm going to let some of you know that that's the case for those that have spent the time, you know, learning their craft, spending that 9 to 18 months or more. Again, past performance does not indicate any future results. So some of you might take a lot longer than that too. And some of you might not have the drive that you actually think you do. That's something else I talk about in the webinars, which I'm not going to touch on now. But what happens is, so I'm going to talk about this today with you guys, is you need to formulate a way to basically go through trial and error with yourself. You need to find a way to rely consistently on yourself rather than someone else. You know, people have looked at me and they've been like, Mr. mentfx, why do you post the testimonials of people leaving your little mentorship? Isn't that like against what the point of a mentorship is? I'm like, no. You're wrong. You know, people that stay, and if they want to stay, they can do it so because usually the community and they love the community and they excel in that kind of space. However, something that's really important is that my job as an educator, my job as a mentor, other mentors, this should be their jobs. I don't know what the fuck they're up to, but your job as a mentor isn't to keep someone strung on your little noose long term, right? Which is why, as you might have noticed for the last few months when we've spoken about EU on the short side and all this fun stuff, it's always been the same thing, right? And then there's people in the comments that are like, fuck you for the same thing. And you're like, bro, trading is the repetition of the same thing over and over and over again. And then your inward expression, right, that is basically forced onto the chart so you learn to see things for yourself and learn to trust yourself with your experience, right? So the point of being a mentor is to have people come and then leave, because leaving either means, one, they fully quit and they don't want to commit to a process, which is fine. That's the prerogative for most people, and most people actually prefer that without knowing it, and sometimes they need the push to see that they don't want to do it. So again, if this is the video for you, then maybe trading isn't for you. Maybe it just looks appealing because you think the money side is, you know, this amazing, which it can be, but you realize the work isn't worth it because you're not going to be paid for the work that you're going to be putting in for a long time until you hit it, right? So you have people that just want to quit, and that's fine, right? And two, the people that leave also can leave because they got what they needed, which in many cases is just proper education, a proper skill set, a proper foundation, a proper way to execute and test that foundation, a proper way to properly collect data and gain confidence and experience behind that data, how to extrapolate that data to understand how to get rid of stupid little psychological issues like FOMO, my zones don't hold, my liquidity always gets ran, I never get my entry, the thing runs without me. The thing runs without me. My higher time frame never lines up with my lower time frame. I'm always caught on the wrong side. Blah, 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 blah. Right? If you're in any of these, like, if you're in any one of these 10 things or 11 things that I just said, you're still in a very low beginner tier, maybe intermediate tier even, level of trading. Not even just the smart money space, but just in trading in general, because you have a non-sound understanding of what creates profitability, which is math, right? Math is all that really matters in this market. And without a proper edge, math, you're not going to be able to make money. And if you think that making money means catching every down move, or like when I say I made money on shorts, people think it means that I have to have sold from here to make that money without even recognizing that I could have sold right there and made a shit ton of money, which actually was one of the things that we spoke about in one of the webinars. I had a trade, I believe, in here, from what I remember, that delivered to around 10, 20 RR. And, you know, most people just they subscribe to this idea that if a market is moving or doing something, they need to be in it, and if they're not, the emotions take hold. There is no confirmation. They're doing absolutely nothing, right? There's no, everything that you might have studied just goes out the window, and you're just like, okay, right now I'm gonna get this, right? Right now I'm just gonna hit this trade and then I'll stop. And you go back to the same thing of, hey, once I get the earn and learn, then I'll actually learn. Once I get the funded account, then I'll actually pursue my funded account, et cetera, et cetera, et cetera. And these issues show themselves up over and over and over again. And it's the same thing that people go through. So today, what we're going to talk about is EU over the last few months and my expectations on it going forward, and why it's so important to be able to think inwards rather than outwards, right? Not letting other people affect your specific understanding of the market. Because again, we trade a very specific system here, which is SSC. But the beautiful thing about this is we can have a number of contexts and stories applied behind this S, which is just structure, right? Understanding where the structure of the market is heading. And even when we have that wrong, which actually is going to be most of the time, these two things right here are going to protect you against being wrong substantially or multiple times. But what's beautiful is even when all of these things agree and then they're wrong, the thing that ties them together, that holds them, like if you're riding a carriage, right? Or yeah, like if you're riding a carriage and there's a rope around the horse, and the thing that holds the horse and constantly makes you able to move forward is this thing called the M, which is mentfx. Now it's the management, right? The management literally encapsulates and holds together the fabrics of these three things right here. So even when all three of these things can be wrong, you can either still make money or lose small and keep losing small until you make big, right? So this is something that's really important to remember, because again, these are one of the things that you'll learn, especially if you're in private mentorship, that get you kind of disassociated from this dumb psychological thought process of, oh no, my zones never hold. Oh no, my structure always wrong. And you start to realize that it's not about having your structure correct or wrong. It's just about understanding when it's time for you to actually get involved and then trading that setup, right? So to speak on this a little bit further today, let's talk about it today. For a long time, I've been bearish on this, and into the start of the last few weeks or so, I've been bearish from this guy right here. And at these points, I was actually following this bearish, anticipating and still expecting price to come here. Now, for you in my mentorship, you guys know that we spoke about the 7 MB rule. That's happening currently on the weekly. So if you're not in the private mentorship, maybe you can figure out what that means. But currently the 7 MB rule, we spoke about around these areas here and said that we are actually in an area because of the 7 MBs that we're actually likely to, and this is called the 7 MB rule, that we're likely to take out this high and actually potentially start some form of an actual uptrend in this market, which of course has been down and continuing down for over 9 months. So that would be a really cool thing to see. So from here, I was bearish. I started following this bearish. I believe I hit some bearish moves. And then since then, it started to invalidate big time on the 4 hour, the 8 hours, the 6 hours. And since then, I wasn't able to catch anything. I actually took a -1 and a break even this week inside of there. On those days right there. So that's what, on Wednesday and Tuesday. So today it is the Friday. So yeah, on Tuesday or Wednesday in here, I took a break even and a loss this week, trying to sell. Oh no, I actually tried to buy, but I just got stopped out on the buys. But you know, that's part of the game. Very, very normal, especially when you understand how math incorporates into a system. And you know, it's crazy to me that there are mentors out there teaching you to learn from your losses, and you know, you gotta change it up after a loss. You gotta go figure out why you lost, instead of realizing that trading isn't about learning from your losses ever, and it's never been. It's about basically taking a horde, hundreds, maybe thousands, because you've tested your system and you're aware of the work you have to put in of wins and losses, right? And then looking and saying, okay, is there net profitability here? And if yes, well, there's no reason you need to look at your losses to change them or to learn from them. And on the other hand, you know, maybe you can improve your wins or change some things about the losses to make that bottom line even bigger, right? But there's nothing to do, because the point of trading or learning to trade isn't to study your losses. Oh God, can't go wrong taking a profit, but you need to study your losses. You know, this is the stupidest thing ever, because when you take profits when you shouldn't take profits, you're going to lose money long term. And when you only study your losses, you're not going to make any money long term. And instead, what I say is study the conglomeration, like the encapsulation of your wins and losses in reference to each other. And if you find that studying these two together always leads to you having a net positive at the end of a month, at the end of a year, there is no reason to change it. There's only mentfunding.com, which you should now use to get funded. But in the case, and this is usually the case, that these two right here, wins and losses together, don't amount to a profitable system. And that means without all the bullshit that you carry around, like your little FOMO and your little emotional trading and your little over trading, over leveraging, going crazy, doubling up, martingale, all this fun stuff, because then you're outside of the bounds of this game. If this is the game of bowling, right, and then instead of picking up the bowling ball, right, you run down the line and try to hit the balls, it might work, it might not work, the score might update and be a little bit higher, but it's illegal, it's a foul, and you'll never be able to participate professionally doing something like that, which means you'll never be trading long term. Just like if you're trading outside of these two things, which is wins and losses, and you're doing things like, oh, just a fun little trade here, oh, a fun little trade here, oh, GameStop's going up, oh, maybe I'll buy in with the retail crowd, oh, my friend told me crypto works, I should go buy some crypto, oh, big interest rate on crypto here, gotta go on the crypto. And if you play this game outside of the box of wins and losses and a conglomeration of the both, and you go out enough times, and you're never going to be invited to professionally bowl again. You're never going to be making money in these markets. You will end up, most likely, inevitably quitting, which is, again, why you see 90-95% of people lose. I talk about this with my mentorship too, so I'm sorry if you guys don't like this video, but some videos are going to be dedicated now to actually talking to you as a human being, like one-on-one, maybe getting you to think, go inside yourself. So these videos might not do as well, but I don't care about that, because those of you that have been with my channel from the beginning, and those of you that are following me psychologically and now need these psychological talks to start to excel, are going to do phenomenally. In the next, 3 to 6 months, you're going to be ahead about 90% of people. But what I talk about a lot in my private mentorship with a lot of people is the MFF results. And I've seen this with my fund as well, with mentfunding. I've seen this with FTMO. I've seen this with any fund. And they released public stats about the people that fail, right? And in the people that fail, like of the 90% of people that fail, and by the way, actually 95%, and by the way, mentfunding actually has one of the highest passing rates in the entire funding sphere, which is absolutely insane. I'm so happy to hear that. It means that, there's still going to be people playing with mentfunding or trying to get funded with mentfunding that don't go through me, but knowing that mentfunding comes after my name and I own it. So a lot of the consumer base is you guys. To see that we have one of the highest passing rates in the field tells me something, and that's really cool to see. Yeah. So thanks for making mentfunding what it is right now. That was brain fart. But basically, these results that they let out with the huge failing numbers of prop firms, right? There are small things that you can do in your own trading right now that can completely change the level at which you're compared to the rest of the 90% that fail. And what I mean by that is, if you really look at it, right? I think one of the things was like, traders that tend to fail tend to risk more than 3% per trade. Well, what do you expect? Imagine that. Risking 3% per trade on an account that technically can only risk that 3 times. No shit, they are losing money. No shit, they are losing overall. So if you as a trader can look at that, or someone learning to be a trader can look at that and say, if I just risk 1% or less, I'm already putting myself in the upper echelon of people that don't fail. Okay, so that was one of the things I remember. Another thing was, people that tend to fail with our challenge don't use a stop loss. So the people that don't know how to actually have losses, but instead play this game of martingale over leverage and continuation of that, right? If you just skip the video and saw me doing this, I know I look crazy, but watch the video and you'll understand it. Okay, interesting. So if I start using proper protectionary measures, if I start using proper protectionary measures to protect my losses, I'm already in the upper echelon of those that are more likely to succeed. Wow, just those 2 things, right? Just those 2 things. And then there's more. Trading through and holding through red news when you're just getting into a trade, or even opening into red news. Absolutely stupid. But more than 90% of the entire crowd does it and thinks that, they can get that real edge, when they don't even recognize that because of what happens with spreads during these times, just like rollover, they're going to lose money. Right? So there are these tiny things that you can change right now about your trading that can already put you ahead of almost everybody in the industry, which is an insane thing to think, but that's sadly what the industry is, right? It's a lot of people playing the slot machine, trying to jerk off the slot machine, right? And just trying to get ahead so they can worry about the real shit later. And that's never going to work, which is why this whole talk of signals will never get you anywhere, this earn and learn thing will never get you anywhere. That's why this talk exists, because you need to recognize at the bottom of it all, You're fully responsible for yourself, and you will be for the rest of your life, especially if you're trading. And if you're trading, the only person overseeing everything that's done is you and only you and your brain, which means that if a portion of your brain, right, which so we can call like one small little part of your brain, let's call it employee A. If employee A is a complete jerk off, right, sucks at their job, doesn't actually do their job right, is like listening to music while people are like there and there's customers, right, losing you money because he's listening to music and not taking the customers. Well, the thing is, you need to be the one to stop that, right? But the hard part about doing that, and this is, I also talk about this a lot, but I'll talk about it here a little bit. The hard part about doing that is that you're your own boss, right? So you don't have another person that can look at you and say, hey, stop being a fucking idiot, right? Hey, get off the phone, do this. Hey, start using a stop. Hey, you're not going to open a trade here because there's no reason to open a trade here, and you know that. No one's going to do that for you. You're fully responsible for every element of that, right? So you're the employee and the CEO. This is what I say a lot of the time. This is the analogy I use. So what you'll notice in this space, and this is why I've also seen people quit. Some people that join my mentorship, this has given them a reason to quit. Maybe, I don't know. They haven't told me, but I'm sure that some quit because of this. I tell them that, be ready because you're taking control of your own life fully, and you need to be aware of that and your own decisions. And I'm guessing, because this is true for the entire world, I'm sure you guys see it too. Most people want to appear to be a CEO rather than actually be one, because the work that it takes to be one is significantly harder than even a mind-numbing job. Because I used to be a mind-numbing bagger, so I just bagged shit over and over and over again, right? It's much harder to be a CEO of yourself and everyone under you and actually make proper decisions and lead those decisions than it is to do something like that. So many people strive that direction, right? And that's just a small example, but this can be extrapolated into many, many, many different things, especially with much smaller differences, right? But just that small difference and choosing this guy over this guy can mean a non-profitable trader. So that's why it's so important that you start recognizing that any bit of stupidity or excuse or blame shifting or consideration that you don't need to take any initiative, or the consideration that you don't need to do the work, or consideration that you can go and learn and earn, or something like this. These are all thoughts and ways of thinking that will, by and large, make you part of the 90% that will lose forever until you inevitably quit and call Forex, stocks, trading, whatever it is, a scam industry. That's where that kind of thing is bred from. Nobody wants to come to you and say, I'm unmotivated, I'm lazy, I didn't make it, and I chose not to do it because I'm aware that I want to work for someone else because I like people making the decisions for me. No one's going to tell you that. Instead, people are going to come to you and say, I tried the stock thing, it's stupid, it doesn't work, I would never do it. Fuck that shit. And then this is the thing that your friends, your family, all the stuff here, and that's why you don't usually get supported on like my son's gonna be a stock trader. That's why you don't get that kind of support unless you've already made it, which, by the way, again, furthers my point of you're responsible for yourself. You can't look for outwards opinion, you need to look inward. And when you start looking inward, that's when you begin to see real success behind what you do. So to finalize what we're talking about today, I'm going to talk about a little bit about what's happening on EU. So it's been very bearish. We've had 7 MBs on the weekly, which actually led me to believe that we wanted to take out this high. And right now, if we go to the weekly, you can see we're actually trading still inside of this 3-box range from this high to this low. So it's still generally bearish, but not really, especially with the 7 MB rule. Right? And now what we're seeing is the first daily, at least, bullish break to the top side. So this was all bullshit. This is not real structure. Or real price action, as we talk about the left to right, the understanding of left to right. And even though, in this case, we finally turned out to be wrong, the amount of trades and money you can make in just these down moves here is more than, some people make in their entire lifetimes. It's just something you have to remember. The amount of money just by institutions and banks and all this stuff traded in this one candle here is more than, the entire, most people in the 90% bracket make in their entire lifetimes. This is how you have to start thinking about this market, really understanding how much money flows in and out of it and how much opportunities there are. And then you need to recognize that because there's so many opportunities, your job isn't to be in every single one of them, not even in 1% of them. What you have to realize is in your mind, 99.9% of what you see on the chart should be noise. That's how you have to start thinking about price. When price is making these big moves, guess what? I'm not in a buy right now. Am I, oh fuck, I'm not in this buy. Goblin mode activated. How do I get in? Buy, stomp, okay? I'll put 100K on this, and if it runs, I'll make 100K at this 1-to-1. Okay, eyes closed, off to the moon. And guess what? Guess what's crazy? Sometimes, and most of the time actually, most of the time, this will do it. And I could make that 100K. I could make that bag. I could bring that bag home. But guess what? Replicating this thought process again and again and again, or having a thought process that leads you to make decisions like these. And right now I'm showing you a very excessive version of that, right? But most of the time, some decisions you're making, you might not even notice, but they're minuscule. They're this different. This is the right choice. This is the wrong choice. And you're making this choice because subconsciously you're allowing yourself to shift to the worser choice when you know this is the right choice. And any of you can probably think about this when you're trading your own live account, your own funded challenge, and you know what you should be doing, but the time pressure is getting to you. But the loss is getting to you. The market's moving without you, and you're already 3 trading days in. Oh God, you got to get in there for those 30 days. Which, by the way, check out mentfunding, a 1-step funding program with no minimum or maximum trading days. Not bad, eh? All right, sorry, that was a little plug. I sponsor myself, so let me give myself plugs when I want to. All right. Now, you can do this, but it's not gonna retain long-term profitability, and this is what I've been telling people forever. That's how people fail, and people do that even on smaller levels, and they lose money forever, and that's just how it is. So 7 MB rule: price is most likely to start taking out highs. It's made a break up. Now this is where a lot of people go wrong, because again, a lot of people are already buying like insanely. And again, it's not wrong to be a buyer here. This is actually perfectly fine. It's actually not even wrong at all to be a buyer here. But many people are taught in the smart money space, in the retail space, in any space, many people are taught that trends develop and move like this. First of all, they're somehow taught that they're all perfect mitigations. I don't know how people believe this shit, but they still do, and they still subscribe to it on Instagram, which, by the way, you know, if you open up Instagram and see this kind of shit, you'll see how many likes it gets. The dumb smart money is already above the smart money. Nobody wants to learn smart money. They want to learn the dumb smart money. So this kind of stuff is like, okay, guys, here it goes. Let me teach you the change of character entry. It comes down. It comes here. It makes perfect liquidity. It comes here. It goes. It comes here. It goes. It makes perfect equal lows. It makes perfect equal highs. It takes it and it goes. Please leave a like, a subscription, a comment. Join my giveaway. I'm giving away my new Bugatti tomorrow, and I only drink sparkling water. Right? This is the mentality right now for many people. And again, for those of you worried that smart money is going to die out and all this stupid shit, first of all, nothing's ever going to die out, ever. And the fact that many disciplines like that one is already significantly higher than people that are trying to provide you real education, it's beautiful proof that those that are unmotivated and don't want to put the time in will continue to lose. And those of you that take even the littlest bit of time, which I'm even asking like 9-18 months, if you can take 9 to 18 months, which, by the way, about 90% of people don't do, just studying one system, you are going to catapult yourself ahead of every single person. And most people are going to look at you and say, how does he do it? What is his secret? What is he doing? And you're going to start getting the same DMs that many of my funded members get, that have proven consistency doing the same thing. And by the way, quick shout out to a number of you. One guy, I think, recently just got max allocated with FTMO, which I believe is 400K or 600K. So huge congratulations to you. And a ton of others are funded. A ton of others are just on the crux of funding with their personal data sheets, as I just showed you. I've seen like 50 of those. It's been crazy. But yeah, back to this. So what people, this is where independence comes in, individuality, understanding of individuality. People are taught to think that this is how markets deliver, and then they finally have their little change of character or their break of structure, whatever the fuck you want to call it. You can use whatever stupid word you want. And now, of course, it's going to be a bullish market. Perfection. This is how markets move. No, this is complete nonsense. I don't know how people get this. I don't know where they come up with it. But most of the time, what you actually see, I'm going to demonstrate to you what you see, and I'm going to show you real examples because this is what you should be doing as a human being. The reality of this market is usually you'll get your moves. Here's your perfect 3 box. You'll get your moves. Maybe it comes, absorbs a high based on a higher time frame continuation, but a lower time frame break upwards, which we are aware is absorption. Breakdowns, breaks down, maybe gives you another 3 box entry here, keeps going, you know, maybe gives you some weird little 3 box mitigations here, which also happens. I've gotten great trades off stuff like this, and then huge continuation, right? And then maybe something like this comes down, starts taking out highs, makes what we call a double MB break up, or in this case, just starts shifting upwards, breaking structure to the top side on higher time frame, still retaining though its bearish push, as I teach you from the Golden Goose method or section 1 of the mentorship, and retains its push, doesn't give you another 3 box, and falls off the face of the earth. Maybe some news comes out, right? Some news comes out, and it just plummets, and there's your like news run, and people are like, oh, I knew the news was going to make it go short, but you know, it's been setting up forever. This is what I spoke about with UJ months ago with you guys. All right, let's have some more tea now. So first of all, this is more so what market delivery looks like. Now, the second thing is, what do actual market shifts or breaks of structure to the opposite side look like? Many people, once again, want to lead you to believe that it's more so something like this. And here we go. We started the bullish run. Let's make it happen. But no, most of the time, and you're going to notice this, and we're going to show you examples because this is how you should study. Most of the time, the way bullish runs are formulated is through periods of accumulation followed by 3 box setups. Here's an example. Oftentimes, you'll find price get above, break the structure, right? This is just normal BOS. Don't call it change of character. Don't call it anything else. Let's not add stupid words to things that are in front of you that you can just utilize and then get on the charts and start testing, because where you get experience isn't from words and labeling and other words and other labeling. It's from experience. Okay. So usually what you'll see is a break up. Sometimes you'll get a double break just like this based on the Dow Theory that I teach you guys here on the public YouTube. Comes down, probably will take out lows, make a break down, come up, make a break up, come down, make a break down, maybe make even 2 breaks down now, right? Then come up, make a break up, make another break up, start making breaks down, and then from there, what you might see is price breaks up, comes down, breaks up, comes down, breaks up, comes down, runs. Okay, and this is usually the wizardry that the market undergoes before it becomes bullish or becomes really truly a different direction. This is going to happen on all time frames, but especially on higher time frames. So what's actually happening is you're going to start getting these whipsaws that create a more back and forth market environment, also known as a consolidation, which is also an undergoing of real smart money accumulation, right? So a lot of smart money, when it wants to go bullish, will accumulate over periods of time. Usually you're not going to get instant moves up because there's not enough time to accumulate. Usually you're going to, from a point that you thought you bottomed at, you'll undergo this process of accumulation back and forth of whipsaws and whipsaws and whipsaws, making crowds think that it's bullish, bearish, back and forth, thinking it's bullish, thinking it's bearish again, thinking it's going to keep going, thinking it's not going to keep going, blah, 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 while all the uncertainty and speculation injects the market with endless amounts of liquidity for smart money to actually capitalize on. And then what you're going to see is that smart money capitalization is going to be then met with a breakup that comes back perfectly into a 3 box setup for smart money that understand what's going on to be able to get involved. A breakup, continuation up, a breakdown into higher time frame 3 box, and or the double rule of a 3 box taught in the private mentorship. That's a double MB rule right there, followed by another lower time frame breakup into another 3 box potentially, followed by maybe one more 3 box, maybe with some news that came in around here, followed by some other news injection, followed by the retail crowd that finally starts buying here, and then a plateau around here, right? And then this will repeat itself. So this is kind of the actual this is the wizardry of the market. This is what the market undergoes. So now with this schematic, so let's call this the mentfx schematic. Now that you have this mentfx schematic in mind, And I show you this right here. We have just had, in a very bearish market, our first break of structure to the top side right here. Now, let me ask you, as someone who has been watching my video, maybe pause it here and leave a comment. Based on this current break and what I just taught you about the real schematic of what the market tends to do when it comes from a bearish to a bullish environment or vice versa, what do you think this is going to do? A, is it going to keep pumping? And again, this is live price, by the way. This is currently, it's 11:11 on Friday. So, you know, I don't even know what's going to happen, but we're going to talk about that. Is it A, going to keep pumping up nonstop? You know, maybe up into the 1.17 areas. B, is it going to pull back here and then instantly go long and it's just going to be long forever? Or come back here into this last S&D and just go long forever? Or C, is it more likely to undergo a few months now of potential schematic building or smart money accumulation in order to, in the future, set up actual 3 boxes that then want to take you long? So I want you to answer one of those 3 things, right? Is it about to like basically take off, pull back and take off, or is it going to probably undergo some form of real consolidation of back and forth break of structures, maybe even taking out some more lows, maybe even coming and taking out this low next and then coming up, right? Which one is it going to be? Now, based on my personal experience, I'm going to teach you about this right here because this is going to put everything I'm teaching you guys today together. Based on my personal experience, this break here that just happened for the first time in so long is a map to this area here, where basically we're about to undergo another few months of story building of BOS liquidations up and down, whipsawing back and forth, which, by the way, if you remember I spoke about earlier, this psychology thing of, oh, my zones and my structures never hold. Well, it's because you need to understand the conditions of a market that create some of the best holding 3-box systems or ranges or all this fun stuff. So what is it more likely to do? I think it's going to do this because I believe that it wants to build up and accumulate. So I don't think that this is going to be the proof of a market that wants to now skyrocket. I also don't think this is the proof of a market that wants to pull back perfectly and skyrocket. Instead, I think it might pull back and make a double break up and then break down. It might break down and then start breaking up, right? All of these things can happen, and we need to be aware of that because we can start confirming them because we're aware of what we're looking for when the time is right. Because when smart money wants to set up that move for us, we're going to be able to get set up for it, right? So that's number one, which is understanding that that's just how I'm going to be following this for the next few months, for the next few years. I'm going to be talking about that in the webinars, as I always do, showcasing exactly how the thought process plays out and why this is so important. But now that we have this schematic in our minds and understanding that usually markets don't just break up and start running. Instead, what often happens is markets come down, undergo a period of chop that breaks up and down, then gives you a setup that is in line with the 3-box system and then runs. So with that in mind, right, you can see that, again, I'm now at a point where I'm not just going to make videos and say anyone that's longing this is stupid, because at this point we've come to a final crossing point, right? We've made 9 months of down movement. So at this point, I'm happy to be a seller here, a buyer here, and a buyer here, because I'm aware of the number of things that can happen currently. And again, I have a few things in process that will keep me out of bad trades, right? Because even though this probably is going to get invalidated and might get even invalidated, it doesn't matter because I'm aware that I have 3 steps to my thing. And even when they all line up, I have management that holds it all together. A lot of people don't understand that. A lot of people get so enveloped in this chart porn idea on Instagram and all this stuff, where the only images and the only context or experience they're getting is perfectly delivering markets. Like, oh, hit it, perfect move, right? Oh, where is it? Let's see if we can find another. Oh, hit it to the pip. Oh, perfect move, right? So instead of going into this independent mindset where they're testing things themselves and proving things to themselves, viewing their own equity curves to prove it all to themselves, to do it for themselves for the long term and actually make money for themselves and be their own CEO, they look to others, not to teach them, to look to others to teach you, like those of you that look to me, is perfectly fine, because you learn the conceptual frameworks that work. You learn to see it in action. You learn to see how it doesn't hold and doesn't work, because guess what? Many of my mentees are going to see the zones that I have fail and not work and nothing happen, but they learn to see how it doesn't matter, because it's part of an overall system that is held together by other tools. Right? So when you put yourself in the mindset of not learning, but instead focusing on only the stuff that teaches you to look at the pinpoint entries, that's all you're working for. So when your zone doesn't hold or it gets traded through, or you don't get your confirm, you're sitting there like, I'm always fucking waiting, I'm never getting my trades, blah 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 blah, and you go into this big rant of dog shit that you could have left somewhere else, and now you're gonna waste months, years focused on the wrong shit. And that's where, once again, most people find themselves, and why most people quit, which is why I'm right here with you, trying to have a true one-on-one, talking to you, whoever it is that you're watching. Most of you might have not made it this far, but whoever's watching, talking directly to you about this. You need to do your personal inwards looking. You can't focus on the outward, and you can't let other people tell you how to focus on the inward. You can allow others like me, like mentors, to give you psychological advice, to give you conceptual advice, to give you tool advice. But at the end of the day, you need to open your own charts. You need to open your own Excel sheets. You need to use tools provided to you, just like I do in the mentfx mentorship, to start properly collecting data and understanding how math defines your system. Trading is nothing more than the execution of basic expected value from a mathematical perspective. That's all trading has ever been. If you don't understand basic expected value, you will never make money trading, no matter how good your predictionary skills of the market are. So this is why you need to disconnect from a lot of this stuff on Instagram and all this crazy other shit, where they only teach you the pinpoint shit that works, because that's not how the market works. The market actually works with you missing zones constantly, zones getting liquidated, you getting in on zones to liquidate other zones that you already had drawn, etc., etc., etc. And then, complement that with everything that you're taught here. Focus on the trend, because again, if this does start going long, you already know most mentorships are going to be looking to go short here, 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 etc. Right? And they're going to be in the same mindset of trying to short all these zones when it's really ready to go long, and they're going to be losing money. But we're not, because when this market wants to show us what it wants to do, which, by the way, again, as we spoke about, doesn't do this. Oftentimes it plays around for a few times, right? Then makes the 3 boxes. When it's time to go and that move is starting to be made, and we can use the lower time frames to now follow this up if we want to, this move that's being made here, no one's going to be focused on this. They're going to be focused on the shit in the left, which I teach you not to do. I teach you to go left to right, define your structure range, and then pay attention to the structure ranges you're in going forward. So if you've been watching my stuff and you know exactly what I'm talking about right now, and you're almost like bored of hearing me say it, you are in the right place, and I'm happy you're here because you're actually learning. So congratulations, give yourself a pat on the back, go grab a coffee, have a sip of your coffee right now, because I'm going to have a sip of mine, and then we'll get back to it. Okay, one sec. Okay, so what leads me to believe what I just told you, where I don't think price is going to straight up. I don't think it's going to come back and go straight up, come back and go straight up. Instead, I think it's going to undergo either a number of these for a while before a real 3-box system begins to set up to the top side, and or take out lows, do it again a few times, play this out a few times, give us a 3-box, and then go. Why is it that I believe that over the other? Well, because I've done the personal testing. And if you go back to before this bearish market started, which was around here, and you study the movement, you're going to learn the same thing, right? Check this out, guys. We came bullish into this market. We came from this low. What did we do? We broke down. We broke down once. We pulled back. We broke down twice, right? So this became a very bullish market that's now churning bearish. It broke down twice. Then played around here for a while, broke a third time, and even a fourth time in this case. Then what did it do? Then it broke up, okay? Broke back, broke up again, came back, broke up again, then broke down, gave a 3-box setup, broke down, gave a 3-box setup off the absorption, broke down, played the absorption, gave you a setup, broke down, and ran. And that is what I just taught you to visualize in the image I drew for you, where instead of thinking that a bullish market turned bearish looks like this, I taught you to think that a bullish market turned bearish will often undergo multiple new liquidations and back and forth structures of bullish and bearish ranges until it inevitably creates a clear bearish range, or a bearish range that then will be 3-boxed and maybe even twice 3-boxed, and then the money will come in. And what do you see happening here? It's all in front of you. It's happened over and over again. I'm just teaching you to view it, because now, guess what? None of this is hindsight. This is what's happening right now. Again, I don't have to be right, but I'm showing you what you need to start thinking like, how you need to start operating. And why am I operating and thinking like this and teaching like this? Because I've done the work on my own back end, and I know what I can start to expect when a market really wants to undergo a shift. I know there's going to be endless amounts of people now that are now in trades like this that are going, okay, here we go. The bullish market has fucking started. Oh God, here I go. A lot that are emotional. And over the next few weeks, months, you're going to see these people get stopped at a break even because instant managing. You're going to see people get taken out, sell into it because they're afraid of losing now, come back up, get stopped out on people that had stops like, more tighter. Start thinking it's long again, get in, starts getting short, starts getting long, right? And then we're going to be sitting there on the sidelines watching our last long POIs for a 3-box setup, and we're going to get it. And by that point, every single one of these people that are fucking flushing money into this, some of them might still be around, and guess what? Great. They're part of those that are playing this game, right? As I showed you earlier. And great, this is going to be one of those times that works for them. There it is. That's the time that's working for them. However, long term, they're going to lose all their money, and we're going to be there to take it, because we're there with the smart money over and over again doing the same thing. And again, this is all perspective based fully, so just keep that in mind. Very important that you guys know that. But that's why I expect this, because I've done the research, and the research is nothing more than looking at the charts in reference to the things you're being taught and understanding what price moves like in relation to what's being taught, right? Remember what I drew for you. There it is. A market that was bullish became bearish, went back to bullish, became bearish, then began giving you your 3-box setups. And guess what happened? Liquidity injections, and that's a good buy market. And guess what? Around these points, what happened? Huge new, there's a little dick there. Huge news releases, right? Interest rates. Oh, this happening. Oh, printing. Oh, inflation. Oh, blah, 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 blah. Yes, all these things are reflecting what's already been seen to happen, right? And now it's now this news is going to fuel the economy and move that market. But again, if you study the movements in price and understand what's going on, you can get positioned, and with proper management, you can swing these trades if you really want to. That's how these kind of swings work. That's how I hit my 400 RR on this move right here. I don't know if a number of you remember, if you've seen my videos, I got a trade right here that ended up hitting this 12-month area perfectly. So I'm going to go to the 12-month very quick. I was targeting this 12-month as my final take profit at 403 RR. And again, it was one of my best trades of the entire year, and that was its delivery. And since the tap into that 12-month, we've started this push up. But again, even though we can easily come back for another mitigation, which will go hand in hand with what I'm talking about today, which is the understanding that to transfer from a bearish to bullish market usually undergoes a number of back and forth BOS breaks, right? To both sides, bullish ranges and bearish ranges, before the real 3-box is given to you that you can then use to go long, right? So that is why now I've shifted from this, I'm bearish, I'm only bearish, I'm only bearish. And again, if you've been watching me for the last 6 months or so, you've seen this. And I shifted from that now to I am neutral and I'm overall bullish. But for the next few months, weeks, I expect this price to not do this, not do A or B, but do C, where it's going to play around for a while. It might break up twice, then start breaking down. It might break down and then start breaking up. But eventually it's going to give us our 3-box system. And that's where we're going to be entering. And I'll be back here in a year's time, in a few months' time, showing you this and saying, guys, I hope you saw my other videos, because I do this all the time. And then you're going to go to the comments and there's going to be someone going, you fucking hindsight warrior telling me you predicted it. No, you fucking didn't. But again, I'm not here to predict anything for you. I'm here to give you the skill set, for one, learning on your own, and for two, thinking for yourself, right? And the 3, to give you the tools to do it on your own, right? I'm giving you the tools that you can do it with. So again, pay attention to these points, these turning points in these markets, and what they actually look like in regards to when the market wants to change. And That's literally how you can anticipate and understand when the market wants to bottom out or wants to actually start a markup, right? I was doing the same thing here. I was talking about this earlier with someone in the mentorship, right? Same thing. At the bottoming of this market, if you could either consider this as a bottom or this as a bottom, either one, right? As it came in bearish, began to undergo, in this case, it underwent like a year or 2 years, right? Yeah, 2 years. It underwent about 2 years of this back and forth. Now, overall, it was still bearish. So really, it kind of started doing it around here, which was about a year. So again, the next few weeks and months are probably going to be like this, where it's coming in bearish, right? Begins to switch bullish, switches bullish, breaks structure bearish, breaks bearish again, then breaks bullish, then gives you a 3-box entry off the bullish ranges, and that fuel injects the up move. And there it is. And then it undergoes the same process here. Okay? So what's interesting is, study what's going on here. This is exactly what I just showed you. Breaks the structures down and up, making bullish and bearish ranges before the actual change, rather than what you're taught usually on Instagram or other dumb YouTubes. If there are like that, I don't even know, but I've seen some shit. You come down and they teach you to go, right, let's go long. And the problem with this is you get yourself so inclined to understand this based on the Instagram posts and stuff, that when you get this break right there, right, and then price doesn't hold it and begins to break down, you're like, whoa, am I bullish? Am I bearish? I'll long this market. I'll short this market. I'll do everything for this market. Please just show me what you want to do. And you lose all your money, right? And like, this is what I just spoke about when I showed you this. I said there's more likely than not people that are already going insane. They're like, okay, FTMO account, here I go. Okay, I hope I close my eyes, I walk away, close my browser, and get the fuck out. And that's all they're doing. And then, that's exactly what happened way back here, because the market repeats itself. It's never done anything different. When this first break here happened, guess what people were doing? Here I go. Okay. I'll protect the low. Target the high. Oh, wait. Equal high liquidity. I'll protect it. Okay, I'll walk away. I don't want to watch it. Here, ready? Let's be those people. Here we go. Okay, here I go. Okay, I'm in. Oh my god, it got so close to my stop. Okay, I'm going to get in 2 more times. Okay. Okay, now I can't watch it. There we go. I can't watch it. Please work. Oh no. Oh. But Mr. mentfx, I'm always right about the direction, but I just get taken out all the time. That is the life cycle of most people in these markets. So how about we don't act like them and act from a state of independence and experience when it comes to these markets by studying past movements, by studying them under a guise, a map, binoculars of the 3-box system in relation to what works, and then we'd be patient about our setups. Because for some reason, it just so much occurs that those that aren't profitable in these markets tend to never be patient. Ain't that something? Bye, guys.